Picking a market to invest in is one of the most important things that you have to decide as a real estate investor. And this is because the market you choose actually plays a very large role in the performance of your individual investments. And given how important this is, today I'm going to show you how to do market research for any market in the United States. And to help with this, I'm trying something new. I actually made a picking a market worksheet that you can use for free and follow along with this video. You also can just watch the video and download this later and do it on your own time, but you should check out the worksheet. You can get it for free at biggerpockets.com/resources, or we'll just put a link in the description below. So definitely check that out and download it. And if you want to, you can pause the video right now, go get it, and then follow along as I explain how to fill out the worksheet. Or if you want to, you can watch the video right now and get the worksheet later and do that on your own time. Again, it's completely free, so you might as well use this if you want to learn how to pick a market. The sponsor of today's video is a longtime BiggerPockets contributor and America's top turnkey company, REI Nation. With over 8,000 properties managed, 3,200 investors served, and more than $2 billion in rental assets under management, REI Nation stands as a leader in the stress-free turnkey space. Operating in 13 different markets, they offer high-value properties with consistent returns and customer-focused property management that outperforms the competition. Whether you're a seasoned investor or new to passive asset investments, REI Nation is there to help you meet your financial goals, mitigating risk, protecting capital, and delivering exceptional customer service. They've done it year after year effortlessly. So are you ready to kickstart your turnkey investing journey? Just click on the link in the description below, and from there you'll be connected with one of their experienced portfolio advisors, whose whole job it is to ensure your success. If you're wondering who I am and why I have any sort of business talking about picking a market, first and foremost, I've been a real estate investor for 14 years, and I also work full-time at BiggerPockets as the Vice President of Market Intelligence, which basically means that I do this looking at individual markets, studying the housing market, studying economics. I do this all day, every single day. One of the things I think is important to know that I've discovered in my job as the VP of Market Intelligence is that there is no such thing as a quote-unquote best market. There are tons of good markets across the United States. It's really about what the best market is for you. And most markets work with at least one real estate investing strategy. So some markets are good for cash flow, where others are good for flipping, some are good for short-term rentals, and so on. So the first thing you need to do when thinking about which market to invest in is, number one, set your own priorities. That's really important, because if you don't know whether you're looking for appreciation or cash flow or a combination of the two, it's going to be really hard to pick a market. The second thing you're going to want to do is set a short list, which is basically come up with 5 to 10 different markets that you're going to do a deep dive into. There's plenty of ways to do this. You might want to pick areas around where you live, or you can look at some lists that I publish or other media outlets publish that talk about best cash flow markets, best appreciation markets, and you can start there. The third step to picking a market is the one we're going to be talking about today, which is market research. And that's when you take that short list and then go into each market, look at a lot of the data, understand what's going on the ground in these individual markets, and decide which one from your short list is the right one to invest in. Again, today, that's what we're going to focus on. And I'm going to pull up on my screen the worksheet that I created. All right, so this is the picking a market worksheet that I created. And the first thing that you're going to do is just put the market name down, because if you build out your short list, you might have 5 or 10 of these markets. And so I'm actually going to do Huntsville, Alabama today. I've heard a lot of good things about Huntsville, never been there, never really analyzed it deeply, so I thought that might be fun. And so basically what you're going to do is go through each of these prompts on the worksheet and just fill them out. And so I've done this research a bit ahead of time, so you don't have to see me Googling around, but I will tell you where I found all of the data for each of these individual things. In market research and on this worksheet, I usually break it down into 2 different things. So the first is what I call market fundamentals. This is more macroeconomic, sort of broad, big picture stuff about what's going on in individual markets. And then later, we'll get to this in just a minute, we'll talk about housing market conditions. So that's like what rent is, how much prices are in the actual housing market. And when you combine those 2 things, then you've done good market research. But let's start at the top. So population growth is something that I think is super important, and because it really impacts supply and demand in a market, more people that are going to an individual area, that obviously means that's going to increase demand. And so when I look at population growth, I see that it's 2.1% for Huntsville. And a pro tip for getting this data is to use the FRED website. It's completely free. The Federal Reserve Bank of St. Louis, they basically aggregate census data, all sorts of other data, and they make it really free and easy for you. And if you want a pro move here, don't just pull up the Huntsville, Alabama population growth. You can also add a second line to the chart and do the national average. And so you can see in this example that population growth in Huntsville is 2%, while the national average is about 1%. So it's a lot better. I'm going to do the same process using the FRED website for a lot of these things, but I'm just going to fill them in quickly so you guys don't have to sit here while I do this. But I looked up household income, which is about $61,000 in Huntsville. Then we're going to talk about wage and income growth, which was 5% last year in Huntsville, which is great because inflation was 3.5%. So that means wages are growing faster than inflation, increasing spending power in Huntsville. That's a really good sign. One of the strongest things I found about Huntsville is that its unemployment rate is 2.1%, which is shockingly low. It's extremely, extremely low. On a national average, the unemployment rate is low at 3.5%, but 2.1%, it's about as low as it goes. That's what most economists would call quote unquote full employment. So that's a really good sign. Next, we'll move to job growth. And we saw that jobs employment grew 3.6% last year. Again, really good. Our home ownership rate is 58%. That's a little bit below the national average, which if you're a rental property investor is a good sign because it means there's more renters, more demand for rental units in that area. And the median age is 37, not super young, but relatively young compared to the rest of the country. So those are sort of the more objective stats that you want to fill out for any market that you're looking at. Then you need to go to some of this more subjective stuff, and you can't really use the FRED website for this. I just recommend Googling around for this type of information. So for biggest employers, I just Googled this, and there are some websites that aggregate it, but personally, I actually like to use local websites like the local Chamber of Commerce, the local government website, a local newspaper or media outlet. I find that those actually have the best information. So I pulled a lot of this from those types of things. What I found out is that the U.S. Army is the biggest employer in Huntsville, followed by just various medical facilities, then NASA, and then Boeing, the airline, the airplane manufacturer. So you can put as many of these as you want here. I just look at the biggest ones, and what I want to see is that they're well diversified. So if you look at Huntsville, it's not the most diversified because it's a lot of like aeronautics, Boeing, NASA, U.S. Army, but these types of companies are very stable. They are not very cyclical. Like when things go bad in the economy, they still tend to do pretty well. So I feel pretty good about that. Next, I went on a website like niche, niche.com and pulled some crime statistics. And this stuff might not make a lot of sense, but luckily they compare it to you for national average. And so you can see that it's well below the national average. So it's a relatively safe city, which is great. Then I went and Googled public schools. And honestly, the public schools are not great in Huntsville, but there are a couple good suburbs that are good. And so depending on your individual strategy, you may choose to invest in the suburbs if you're looking for more family type tenants. Okay. Then moving right along, we'll go to the regulatory environment. And this is something that's hard to quantify, but basically different states, different municipalities have different regulations about being a landlord and being an investor, particularly around short-term rentals. So you want to see, like, is it a relatively friendly place for business and landlords or short-term rentals? And Huntsville is. So I would say it's a positive climate for the regulatory environment. But if you look at a place and there's a lot of regulation, it doesn't necessarily mean you can't invest there, but you want to write that down because that's an important data point for you to consider when you narrow down from your short list. The last thing is what I would call X factors. And this is like just random things that you uncover in your research that make you like or dislike this particular market. So when I looked into Huntsville, I didn't really find any of these because I'm not doing a super deep dive here. I'm just showing you an example of how to do this. But I think some good opportunities for you to find these X factors are, again, looking at local government website. Like, is there a lot of infrastructure spending? Are businesses moving there? What is just going on in the general business climate? Those types of things can be X factors one way or another. And I recommend you look into a couple of them. So that's it for our market fundamentals. Hopefully you can see that this is very easy to do and you could be able to do this on yourself, especially if you're using the worksheet. And we're going to move on to housing market conditions. All right, so housing market conditions gets back into the more objective thing. There's just stats that you can look up. There's not really a lot of nuance to it. And most of these stats can be found easily either on Redfin, that's usually where I go, Zillow has decent data, Realtor.com, those types of websites, you can find them relatively easy. So I'm just going to show you what I found for Huntsville rather than just, bore you by going through the website. But what I found was that the median home price is $315,000 in Huntsville, and it grew not at all last year. It was actually flat. So it wasn't up, it wasn't down. That's not uncommon right now, but it's important to know that it was flat last year. But over the course of the last 5 years, it grew a whopping 46%. So that's pretty incredible to see. A lot of growth over the last 5 years. The next thing is housing inventory, because this will tell us if we're in a strong buyer's market, seller's market. And what I found was that inventory was up 12%. That is probably why housing was flat last year, because the less inventory, the more it's a buyer's market, prices tend to go up a little bit less. And so that does not necessarily a bad thing. It just helps you understand how you should bid if you do wind up offering on properties in that market. Next, we have property tax rate, which is super low in Huntsville. It's 0.36%. The national average is about 1%, so it's about a third of the national average. So that's really low. And insurance, which I looked up, was about $1,500. So hopefully you can see it, guys. I just Googled this stuff or looked on Zillow or Redfin. It took me like 5 minutes to get all this information. So hopefully you can find it easily as well. Median rent was $1,463. Year over year rent growth was 3%, and 5-year rent growth also really strong at 50%. Now, these last two things are things that you have to just calculate yourself. It's not hard because you've already done the data, gotten the data. So you want the rent to income ratio, which is basically take your annual rent. So you take this number, 1463, multiply it by 12 to get the annual number, and then you divide that by the median household income. And what you get, or what I got when I did that for Huntsville, is 29%, which is pretty good. And I like 29% because budgeting experts say that tenants should spend about 30% of their income on rent. And you can see it's right around that number. That means that rent is relatively affordable in Huntsville for people, which is good because that means they will probably pay on time and there might be opportunity for rent growth in the future. The last one is the rent to price ratio. All you need to do for that one is divide the monthly median rent, 1 month of rent, divided by the median sale price. And when I do that, I get 0.46%, and that is pretty low. So that means that Huntsville is going to have relatively low cash flow. And that doesn't mean you can't find cash flow. This means on average, if you just take that median rent compared to the median home price, you're not going to get great cash flow. So that's just something to know, but you want to go into these individual markets and start looking at deals to see if you can get cash flow. This is just one barometer, sort of rule of thumb way of looking at how well a certain market might offer cash flow. So that's it. Hopefully you can see how easy this is. I went through it quickly because I just want to show you how to fill out the worksheet. Hopefully, I think the first time you do this, everyone, it might take you 15 or 20 minutes, but after that, you'll probably get this down to 5 or 10 minutes, and using this worksheet, you'll be able to compare them one another and see like, okay, of my short list, like one of these 5 is way better than the other ones, or I want to narrow down to these 2 and then go out and meet an investor-friendly agent in these 2 markets. So hopefully you can see that this worksheet is really helpful and useful in doing that market research step. All right, so that's what I got. That's the advice I have for picking a market. Hopefully this is helpful to you. Again, if you want to be able to do this in the same way that I just demonstrated, go to biggerpockets.com/resources or just click a link in the description below. And if you really want to become an expert in picking a market, next week, I'm going to be teaching a masterclass on how to pick a market. It's kind of like what we did today, but in much more detail. I'm actually going to go step by step through sources where I find each individual data point. I'll explain in a little bit more detail than I could today what each data point means and how you should use them in setting your own strategy. Thank you guys so much for watching for BiggerPockets. My name is Dave Meyer. I appreciate y'all being here, and I'll see you next week.